I do want to bring in my next guest, Christine Short. She's the head of research at Wall Street Horizon. Christine, great to have you on the show this morning. Yep. And let's start initially with the takeaway from Delta's results and guidance today.
Yeah, I've been talking about this or speculating over the last few weeks. How are companies going to give guidance given the uncertainty right now? And Delta was a perfect example. I said we might harken back to 2020 during Q1 2020 earnings during the pandemic when many companies said we just simply can't give guidance in this environment. And Delta, although they just updated guidance a month ago, they lowered guidance, revenue 2025 guidance to 3 to 4% growth. Previously, it had been 7 to 9%. Now they said they can't even reaffirm that lower number. So I think this is a trend we're going to see coming into this earnings season, companies saying we simply can't give you credible guidance because although we have tariffs that kicked in last night, we know there's negotiations going on behind the scene. It's not completely settled, and they don't want to spook investors with a number that might not be accurate. So yeah, Delta, I know they're up 1%. I think they were down initially after reporting because those results and the commentary from CEO Ed Bastian wasn't great. They're really worried about consumer demand for travel. That's what they said a month ago at the JP Morgan Industrials Conference along with Southwest, United, American. That has been the concern, and it's not getting any better. Consumers are obviously being very tight with how they spend their discretionary money.
So, Christine, of course, Delta now, this day and age, the past few quarters at least, does seem to unofficially kick off the earnings season. Historically, we had always said that with the bank reports.
Yes.
We'll get the bank reports on Friday. Anything in particular that you anticipate from that sector and some of those companies?
Yeah, look, the banks have a lot of tailwinds coming into this earnings season for Q1. So we have to remember this is, of course, the data we're getting is backwards looking, but things like net interest income has remained high because interest rates have remained high, and that's what the money that banks make off of loans. Wells Fargo said they expect a 1 to 3% increase on net interest income versus 2024. So expect a lot of the banks to have made out well there. Trading revenue, we know a volatile market brings in trading volume. That's good for the banks. It's obviously, investors try to buy low, sell high. So there's been a lot of activity on that front. Even mortgages. We actually saw, home sales, loosening up a little bit in the first quarter because there was more inventory, but pending contracts have actually been lower. That's more of a 1 to 2 month leading indicator. And considering what's going on now and what I said with consumers being kind of holding back on large ticket purchases, that being the largest purchase you'd probably make in your entire life, I don't think the mortgage or the lending area is going to be so bright. One of the headwinds coming in, and I think it only gets worse from here, deal making. So IPOs and M&A was expected to return in 2025 as the Fed started to pull back on interest rates, in the fall of last year. We've seen a lot of companies now saying, or rumors of putting those plans to go public on pause. Klarna, Chime, StubHub, they're all rumored to be preparing for an IPO in 2025, but with tariff uncertainty, they're likely going to put those plans on hold.
Mm-hmm. What are the overall growth projections, Christine, in terms of the percentage of earnings growth that you see tracking now for corporate America?
Yeah, so currently the blended growth rate is at 7% for Q1. That's earnings growth year over year. Great number. That would be the 7th consecutive quarter of earnings growth. However, it's come down quite a bit from January. We're looking at 12% growth for S&P 500 back in January. So we see analysts have pulled back. Corporate guidance has come down a bit. We've seen the most companies giving a negative guidance than we've seen historically the last 5 to 10 years. So that's certainly coming in. And then I'd like to look at some of the early reporters. Although we haven't unofficially kick off with the banks on Friday, we've seen 20 reports so far from the S&P 500. Only 60% of those names have beat analysts' estimates on the bottom line. And as you know, we tend to see 80% of companies beat. I think the long run 10-year average is about high 70s for beat rate. So to see that early picture only at a 60% beat rate, and that's backwards looking. So it doesn't bode well. I would say there are some bellwethers in there too amongst the industrials and consumer staples and discretionary. So it doesn't really start off painting Q1 with a rosy picture. And we know guidance likely isn't going to paint 2025 overall in a great light as well.
It's interesting, Christine, as we're talking, I'm seeing shares of Delta. We have Delta trading, of course, on the floor of the New York Stock Exchange. The market isn't open for trade just yet, but pre-market, we do see the stock up a little bit more than 3%. 10%. So I want to go back to this point that you made earlier, which is that in this environment, perhaps the most common course of action that we would see is no guidance as these companies wait for things to unfold. Is there any more you can share on that front, including perhaps from some of the indicators that you follow in terms of what we could anticipate?
Yeah, I mean, like I said, we've still got a lot of names out. We've had other names also not giving guidance. Dollar Tree being one in the retail space who gave guidance excluding the impact of tariffs. But they did give kind of some color around if there were tariffs at that time when they reported on March 26th, it would hit the bottom line by about $20 million a month. So there's going to be a lot of different iterations. Giving guidance this quarter is certainly going to be a little murkier than expected. What's interesting about Delta trading up right now, I'm trying to think back to the report. I didn't listen into the call, but there wasn't a lot of great news on that. But what I think investors are really trying to be optimistic that there is a solution that is going to come when it comes to tariffs. They believe, even though they hit last night at 12:01 a.m., that there's something on the table that, Treasury Secretary Scott Bessent said 70 countries had come to the table looking for negotiations. The markets have just been really optimistic and really bullish that there is something that's going to end this uncertainty, that there will be deals made. They almost just can't digest that this is it. And so we're still trading at 19 times current earnings. So the S&P still has quite a rich valuation. And that to me says investors are feeling optimistic or hopeful at least for a solution.
Interesting, Christine. In terms of where we go from here, anything more you can provide?
Yeah, so after banks, we kind of get into bunch of different sectors. We'll hear from industrials, we'll hear from obviously retailers to round out the season, and we're going to be listening again for tariffs. Last quarter was the highest mention of tariffs by S&P 500 companies. More than half mentioned tariffs, but only 12 were mentioned recession. That was research done by FactSet. So I'll be interested to see if there is more of a mention of recession as more economists at banks have upped their probability, as we're looking at more Fed rate cuts potentially on the table because of this.
Yes.
And so that correlation wasn't really made last quarter. They were mentioning tariffs, but not the possibility of that resulting in a recession. So we'll be listening in to see if that has changed in the Q1 reports.
Christine Short, always good to get your earnings season insight.
Sorry I couldn't be more bullish, but I try. Look, these companies have a lot of cash on hand, so we'll just have to see what they're expecting for the future.
Great input. Thank you so much. Christine is the head of research at Wall Street Horizon.